Capitec closed at 147 Rand, down 2/3% today. What do you make of the movement in the share price? This one, many feel, is largely priced for perfection.
Absolutely, Bronwyn. If you look at Capitec, it looks very expensive at its current levels. I prefer to look at the banks on a price-to-book basis. And if you look at Capitec currently, they're trading at about a market cap of, call it 12 billion. Net asset value of 1.7 billion. So you're paying goodwill here of 10.3 billion for the counter. So there's a lot of growth being priced in. Just to put that in some sort of perspective, if you look at the big four, you're probably looking at the price to book of 2 times. Capitec trading at the price to book of close to 7 times. So there's an awful lot of growth being priced into this counter.
Johann, can I throw another theme at you? What about these foreigners and the fact that they are on the hunt for potential acquisitions? They can borrow at potentially 0 interest rates and deploy that cash elsewhere and buy up assets, as we're seeing in the retail space, Massmart now in the offing. Could Capitec not be very attractive to an international banking player?
Yeah, once again, you maybe just need to look at what sort of impact that would have on some of the international players. If you look at HSBC, Nedbank, if the deal goes through, will probably only constitute about 5% of HSBC's balance sheet. So Capitec in an HSBC's instance, for instance, would probably be a rounding error for them on their balance sheet. So I think it's a question of size, and I think it's a question of price as well. Like I say, they can look at some of the other players. You're looking at somebody like First Rand. It almost looks like they're being dressed up for a potential foreign suitor with the restructuring in the ownership structure via RMB. So I think it's a question of price and a question of size of Capitec. Having said that, Capitec does provide international investors with a unique skill set. I think they've very much perfected banking to the emerging market, and it's very much a model that can be suited to being rolled out into the rest of Africa. The question just being, would you be prepared to pay goodwill of call it 85 cents in the rand for the business?
If you are currently invested in Capitec at 147 Rand, what would you be doing with it?
Bronwyn, I've been saying this counter has been full since it's been at 100 Rand.
So you're going to keep saying it's full at 147?
My opinion is maybe not the best to go for, but at this point in time, I think there's better value elsewhere.
And in terms of better value elsewhere, what would you potentially be looking at?
Looking at the big four, something that looks a bit attractive for me currently would be ABSA. If you look at ABSA, it's probably trading at the price to book of 1.8, which is at a discount to the rest of the sector trading at 2. It's at a discount to its long-term average price to book. And yet ABSA has remained profitable right through the cycle. I think the lowest their ROE went was close to 15%. That's still ahead of their cost of capital. So in essence, they're still adding value for shareholders, even in an environment where we can argue it's probably been the worst banking environment since the Great Depression.
And then just very quickly, Nedbank at the bottom of the top 40 today, and the stock closed down over 2% at 146 Rand and 5 cents. Any thoughts on why we're seeing Nedbank under pressure? Is it
Bronwyn, I know there's been some speculation about Michael Gagan at HSBC that there might be a boardroom reshuffle and that he might resign if he doesn't get the chairman position at HSBC. They've still got an almost archaic structure where they've got an executive chairman and the CEO reporting to him. But I don't really think that this deal is dependent on Michael Gagan. As far as I understood, it was a board decision to look at Nedbank. So I don't really think it's dependent on any sort of internal structural issues with the management at HSBC.